This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The U.S. Energy Information Administration said on Friday that crude oil blending and underreported oil output were key reasons for recently high adjustment figures in the weekly oil inventory data. The EIA will change its surveys to get more accurate crude output data, and also change its accounting methods for crude oil blending, Joe DeCaroli, an official with the EIA, said on Twitter. The EIA has posted 3 consecutive weeks of relatively high adjustments to crude inventory data. In the most recent data, the EIA reported an adjustment factor about 2.27 million barrels per day, BPD, on par with the largest adjustment ever since records began in 2001.
Oil prices recovered from a brief sell-off to gain by more $1 per barrel on Friday and ended the week higher, driven by renewed optimism around demand from top oil importer China. Brent crude futures rose $1.08, or 1.3%, to settle at $85.83 a barrel. U.S. West Texas Intermediate, WTI, crude futures settled at $79.68 a barrel, up by $1.52, or 1.9%. Both benchmarks posted their highest closing levels since February 13th. Prices dropped early by more than $2 per barrel after a media report said the UAE had held internal debates on leaving OPEC and pumping more oil. Prices rebounded when 2 sources with direct knowledge told Reuters the report was far from the truth.
Moving on to the top news in the energy sector.
Russian oil and gas revenues, the mainstay of state coffers, rose 22.5% in February, but was still down 46.4% from February 2022, Finance Ministry data showed on Friday. Tax and customs revenue from oil and gas sales had fallen in January to its lowest level since August 2020. Moscow relies on energy revenue. Last year around 11.6 trillion rubles, $154 billion, to fund government spending, and has been forced to sell foreign reserves to cover a deficit stretched by the cost of its military operation in Ukraine.
Top energy executives and officials from around the world will descend on Houston next week just as the political fallout from Russia's invasion of Ukraine a year ago continues to distort global oil supply lines and put long-term energy security front of mind for governments. Oil company chiefs and ministers will make their case for investment in all forms of energy, fossil fuels and renewables, to meet rising demand and at the same time accelerate the move toward the low-carbon industry of the future. A record 7,000 people have signed up for the week-long Sarah Week discussion of fossil fuels, clean energy, advanced energy storage. Next, we have the top news in metal markets. The United States and European Union are working toward agreement in principle on a deal to make European minerals eligible for tax credits, a senior EU official said Friday. The $430 billion U.S. Inflation Reduction Act passed in August requires rising percentages of battery minerals to come from the United States or a free trade agreement, FTA, partner. The EU official said an agreement could come as early as next week, in time for a visit by European Commission President Ursula von der Leyen to Washington, on a deal that would give the EU free trade agreement-like status.
Copper prices on Friday headed for their biggest weekly gain since early January as strong economic data in top consumer China raised demand hopes. Benchmark copper on the London Metal Exchange, LME, was roughly unchanged at $8,956.50 a ton at 17:17 GMT and up around 2.8% for the week. Prices hit a 7-month high of $9,550.50 in January but stalled amid slack Chinese demand and expectations that the U.S. Federal Reserve will raise interest rates further, dampening economic growth and boosting the dollar. A stronger dollar makes metals costlier for non-dollar buyers and can suppress demand.
We will now look at the top news in the agricultural sector.
Malaysia's palm oil inventories at the end of February are forecast to shrink as production, hampered by heavy rains and flooding, tumbled to a 1-year low, a Reuters survey showed on Friday. Stockpiles in the world's second-largest producer are expected to fall 2.74% from January to 2.21 million tons, according to the median estimate of 10 traders and analysts polled by Reuters. Production figures are also expected to decline due to high rainfall and fewer calendar days during the month of February, said Nagaraj Maida, Managing Director of Transgraph Consulting. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.